Hi and welcome to another edition of Market Analysis by tradersclub.co.uk. If you need to get hold of me, my email is philip@tradersclub.co.uk. Alternatively, you can follow me on Twitter at philipconter. Disclaimer, very briefly, anything that we discuss here, it's available in a public domain and therefore it should not be considered to be advice for your investment and trading. We are simply discussing the information that's available in a public domain for the benefit of the club members. Okay, let's look at a few maybe indices, some commodities. I would actually like to spend more time looking at few currencies like euro, dollar, cable, and maybe dollar yen. But very briefly, we can start with S&P. This is the daily chart of S&P. It's clearly defined downtrend. There is no denying it. Higher highs and higher lows. However, we did see a bit of a consolidation during the past week or so. Thanksgiving low volume, markets were closed for a day, and they also closed earlier on Friday as well. So the market spiked, well, S&P, sorry, spiked higher and kind of reversed towards the closure and closed almost 7 points, 7 big points below. The logical resistance, looking from a daily perspective, should be around these levels, 1814, 1817, even 1820. But we are coming to a part of the year where Santa Rally is quite possible. It's a generally bullish time of the year, and unless something major happens, especially next week and Friday in particular with non-farm payroll, it appears that this uptrend will stay intact. So the logical levels of support for me, very briefly, would be at these previous lows. Sorry, I'll change this to be nice and blue. Here we go. So levels of support would be around 1802 followed by 1800, if those levels are broken, then obviously any of the further lows around here, 1777, and also this 200 period moving average on 4-hourly, 1770, would offer a logical level of support on the way down. Alternatively, as I mentioned already, levels of resistance can be found here at the current highs. So we're going to change that to be nice and red. So around 1813, 181330, followed by this rising resistance trend line, but it's only a guesswork. We can apply Bollinger Bands, we can apply a few other bits and pieces there as well, which are pointing to this 1818 or 1820 level as a logical level of resistance on the way up. So let's look at that from a different perspective. Actually, what we can do is we can check out FTSE very quickly and see how that looks, because that actually looks a little bit different than S&P. So you can see that S&P was creating higher highs and FTSE is actually going sideways, and this is a weekly chart, so 1, 2, 3, 4, 5, almost 5 weeks. If we look at this on a daily time frame, we can see that this resembles some sort of a flag pattern. They tend to be continuation patterns. So let's do that. Then we can have a nice little support going down here as well. It's not a textbook, but it appears to be there. So in my book, we are currently supported by a 50 period moving average on daily, which is quite important support, and a further loss or a daily closure or even 4-hourly closure below the 6636 level could potentially target further support at any of the previous lows, which is around here, 6624, followed by 6611 and even 6600. So any of these levels would act as a level of support on the way down. Alternatively, if we break out higher, logical levels of resistance would be at this 50 period moving up. Well, firstly here at 6646, followed by 6668, followed by this high 6682, and I would really like to see a breakout above 6,700, and in that case this would be 6692, which is a 4-hourly 200 period moving average going higher. So yet again, looking from a daily perspective, all of the other indices, including S&P, Dow Jones, Nasdaq, DAX, are all quite bullish and creating higher highs, where FTSE is going sideways and it's consolidating further. So it's either that this index needs to break out and catch up with the other ones, or the others need to have a little bit more consolidation as well. So let's see how this works. We can look at the gold very briefly. Daily chart of gold. For me, a very significant level of support is here, which is the current low. So make that nice and blue. So 1227 is very important support resistance, support level for me, followed by 1234. Those two levels would really need to hold. If we see a daily close below those two levels, then it'll be logical to assume that further support could be found at 1207, 1200 level, and definitely around 1180. So all of these levels will offer a certain amount of support on the way down. Also, these trend lines are still intact. So this previous resistance, it's acting as some level of support at the moment, but it appears to be quite bearish. Gold is in clearly defined downtrend. So if we see a breakout above a current high, then obviously a logical levels of resistance on the way up would be at 1261, followed by 1267, followed by 50 period moving average on daily 1295, 1300, which is a cluster of these highs and lows as well. So I would like to see a closure above these levels and targeting 1261 before I can find further resistance at around 1267, 1295. Alternatively, 1227 must hold as a level of support. Otherwise, it's quite logical to assume that further support can be found at 1207, 1200, or even 1180. So let's close that. This is the important one as well. So a weekly time frame on oil. This is WTI, US traded oil. Brent is still making higher prices where WTI is falling. We are reaching a very significant support level, which is 200 period on weekly time frame. And that support must hold, otherwise it's logical to assume that further support could be found on any of the previous lows around 89, even 85 level. Alternatively, if this support holds and we break out higher, I would like to show you this in a daily time frame. So the daily time frame looks like this. So we could see that there is definitely a resistance at these levels. This is okay. We are currently capped by resistance at 93.83, which is a 20 period moving average on daily. If we break higher than that resistance, So what I'll do is I will change the color of this quickly and make that nice and red so we know it's resistance. Alternatively, if we break out higher, then it's logical to assume that any of these previous highs around 95.50 and definitely around here 97.84 and 98.55, which is very close to this 99 level that we tested in the past on many occasions, would act as a logical levels of resistance on the way up. So a fairly big trading ranges either way. So resistances on the way up, yet again above 93.82, a daily closure above this level, and a green candle forming here, at least 4-hourly, could potentially target 95.50, even 94.80, 95.50 as the next logical levels of resistance, followed by 97.84 and 98.55. But oil appears to be quite bearish. There's loads of bearish plays at the moment, and loads of traders are looking for a loss of this 91.80 level, which is 200 period on weekly, and a retest of 89 or even 90 as a nice round number, followed by 85.45. So that's as much as we can cover on oil, unless we decide to go into kind of very short intraday stuff. This is dollar index, and very briefly, this appears to be consolidating as well sideways. We're waiting for US numbers to be published on Friday. Yet again, non-farm payroll. A unemployment rate will have a significant impact on Fed's decision to taper, and if anything changes, if numbers are quite good, the market perceptions might change, and we might assume that tapering will happen sooner than initially planned. So that will have impact on dollar in particular. So what I'm looking for at the moment is the current support is around 80.45 level, followed by 80.34, and definitely around 80 level. 80 is it's a nice round number, and it's been respected on a number of occasions in the past as a psychologically important level for dollar index. So these would be levels of support on the way down. Alternatively, levels of resistance at 80.80, and definitely around here at 81, which is this falling resistance trend line. So the daily closure above this level could potentially target further resistance at 81.30 or 81.48. Looking at it from a bullish perspective, if we take it from here and add that on the way up at the breakout, depending where it happens, it looks like potentially we could be targeting 81, 85, 82 level, which is sitting quite nicely here with this 200 period moving average on daily, and also the cluster of these previous highs and lows. That's assuming that it's a bullish play and we see a breakout. So quite a important instrument to watch. Let's look at this as well very quickly. So this is a euro dollar, and a euro dollar is obviously going to be quite significantly affected by whatever happens with dollar index, because that index is weighed against euro almost 40%. And just looking at this from a daily perspective, we could see that euro is currently quite high, but it's experiencing a certain level of resistance at this rising resistance trend line level, and it's currently capped by 13,622 level. We could see there is a previous high at this level as well, at around 13,642 as well. It looks like that it's potentially pulling back and looking for some level of support before it finds a direction. Current support on a daily time frame is 13.5670, and if I open this up in a shorter time frame, it'll be even more logical because it's almost very close to a 200 period moving average on 4 hourly, which is usually a very, very strong support. At least the first touch of that level is tested, and usually there is a consolidation at that time. Also, this level, it's 1353, would be a logical level of support for me as well, which is a 50 period on 4 hourly as well. And this appears to be, at least in intraday time frame, as a nice uptrend with the creation of higher highs and higher lows. However, we are coming overextended on the way up, and we are testing some significant resistance levels. A breakout above these 1362 and 1364 levels, and a daily or a weekly or 4 hourly close above these levels could potentially be seen as a very bullish development in euro dollar. Let's look at this. This is a cable. So a cable appears to be quite bullish at the moment as well. We saw a number of green candles forming and moving higher. In the past, we were looking at these trend lines saying that they're possibly offering some level of resistance. We are tagging that level now from underneath, and also it's a level of these previous highs at 1638, very close to 1640. So this is a significant resistance at the moment. And if we break out higher, then a logical level of resistance would be 200 period moving average on weekly. Sorry, this is a monthly actually at 1663. So it appears to be quite bullish from that perspective if the breakout happens. Weekly time frame appears to be the same, confirming the same levels, and the daily is, let me just move this for now. From the daily perspective, we're seeing that we are retesting that previous high as well, and in the past, we were all looking at this kind of area here as potentially being a double top, and we saw a couple of fake outs, just a short-term closes below, but that did not happen. Instead, the price went up, tagged it from above as a confirmed support, and we're moving higher. But yet again, I would be watching this currency pair, especially next week on Friday, and the reaction to dollar index in particular, and possibly indication by Fed about tapering. So support on the downside is very clearly defined here at 1625, which is this previous high. Usually that level should hold at least the first touch of it before we move higher, assuming that this continuation of the uptrend stays intact. The last thing that we can check out as well is dollar yen, and this is a weekly time frame. We were looking at this. This is actually very similar to Nikkei, which is a Japanese index. We saw a breakout above this 98.90 level, 99 level, and the price is actually just shooting higher, especially since we broke this 100 level, which is yet again a nice psychological level. We are above this high, 101.42. So it's logical to assume that 103.65 would offer some level of resistance on the way up as well. The one thing that it's kind of making me wary at the moment is that we could see that there is a number of 5 weeks. There's a significant number of weekly gains, and usually after 3, 5, or 8 weekly or even daily gains, there is some level of consolidation, i.e. the bullish traders are becoming tired, and maybe a consolidation happens of some sort before we gather strength and push higher again. So we're either going to have 3 straight weeks of trading higher and possibly attempting to challenge this 103.65 resistance. Alternatively, some kind of consolidation is quite possible, and in that case these previous highs, which were resistances in the past at 101.53, would offer a logical level of support on the way down, followed by this level here, which is 101.91, this high and this low as well, and obviously the low of this candle, which is 102.11. So all of these levels would act as a level of support on the way down. Resistance is clearly defined above with a previous high. So I've just realized this is a very long one, very long analysis. So hopefully you enjoyed it. And if you need to know more, let me know, and we can take it as from there. Thanks for listening. Bye.